Hi, Barbara Friedberg here. Today, we are going to be talking about how to beat inflation. I don't know about you, but I have noticed my budget being slammed with the impact of rising prices at the grocery, when traveling, entertainment, and pretty much everything else. But have no fear. This is not the worst inflation we've had in the last 50 years, and there are solutions where you can combat inflation and continue to grow your wealth. So let's get started. Here's what inflation has looked like since 2000 through 2004. And let me take a step back before we look at the exact numbers and explain quickly how we're measuring inflation. We're using the government CPI or Consumer Price Index. Don't fall asleep yet. Really quick explanation. It's a basket of goods that the government measures the price on every month and includes stuff like housing, food, beverages, apparel, medical care. And when that goes up, the inflation rate, the consumer price index inflation rate goes up. Is it perfect? No. Are there many other types of ways to measure inflation? Yes. But for our purposes, it's good enough. So let's take a quick walk down memory lane. You'll see where inflation has been, both this millennia and for the past 50 years. And then we're going to get right into the tips of how we can combat inflation. Inflation has ranged from 3.4% in 2000 on up to a high in 2022 of 8%. We had a low in 2009 of negative 0.4 after the mortgage meltdown and recession. And in 2015, we also hit a low of 0.1%. But in general, it's been pretty tame. And the Federal Reserve Department, which is in charge of trying to keep our economy stable, and who likes to keep inflation at about 2-3%, has pretty well managed to maintain that. So pricing has been rather reasonable until COVID hit. And COVID, with the supply chain shortages, the increasing demand for certain goods, really put the squeeze on supplies. And when supply goes down for goods and demand is the same or higher, prices go up. And so your dollar will buy less. So your dollar is worth less today than it was in 2020. And as you add up the inflation from 2021, 22, 23, and midway through 24, we're up about 17% overall in the past 3.5, 4 years in pricing. So ouch, that really hurts. And for some of us, we're having really trouble making ends meet. So let's get going and talk about the solutions. You're going to learn about how to handle inflation, tips to manage it, keep your budget somewhat in line. When I was a girl, we had a lot of inflation. In the 1970s and 80s, inflation topped probably 12 and 13% during some years. Now, you may be like, unbelievable. Well, yeah, we got used to that because we had some really high inflation then. So fortunately, my mom taught me a valuable lesson. Whatever you can do, stock up on non-perishable goods when prices are low. And we didn't have the computer back then. We did not have apps that could compare prices. Today, we're very lucky. In fact, my computer has an app that just pops up with cheaper prices right on my computer screen. So when shopping, the bottom line is download the apps from your favorite stores, be they your grocery store, Target, and notice when they have special deals, because that's when you are going to stock up on non-perishable items. So if you can stock up on toilet paper, on canned goods, on dishwashing detergent at 25-30% below prices today, you are in essence slashing your inflation number. Devote a closet, the floor of a closet, your basement corner to keeping a stash so that you're not forced to pay the high prices that have become standard today. When traveling, same principle goes. Download the apps, read the travel sites, look for deals. And don't rule out going to the beach on the shores of Michigan or the shores of Texas or Florida off season. Or draw a ring of 2, 3, 4 hours around your house and then drive to a vacation spot. Get a kitchen in the room, cook some of your meals inside, and you can have a really cheap vacation. Now, here's a really good trick. If you're buying a home, what you want to do during periods of high interest rates, high inflation, is you want to buy an adjustable rate mortgage, especially when rates are expected to decline like they are now. And so you might pay a highish rate today, but as interest rates fall, the interest rate you're paying on your loan will decrease, and then you can refinance at the lower rate with a fixed rate loan for 15 or 30 years. That will save you a lot of money on your loan payments for your house and those sort of things. And you'll be paying off your house with cheaper dollars. About debt? No debt. Do whatever you can to avoid credit card debt, because right now, credit card debt rates are like 30%. That means if you buy something for $100, you're paying $130 if you don't pay it right off in a year. And that is creating your own inflation on top of inflation. Now, gold, it's not clear that gold is a tremendous inflation hedge, but what we do know is it has been a store of value and used for money or to be easily converted into money over the past millennia. I mean, thousands of years. And so if you want to invest a small portion, 5% of your portfolio in gold, you might kind of balance it out by protecting a certain amount of your purchasing power. Now, the disadvantage of investing in gold, commodities, and precious metals are that they do not pay dividends. Unlike many stocks and bonds where you get dividend payments for waiting, you do not get those with gold or precious metals investing. Here is a company that we partnered with, and they give you a gold investing app. Of course, if you invest with the Vaulted app and use the link below, our affiliate link, or click on this advertisement in the article that I'm also linking below, our company might get a small commission to help fund this channel. Keep investing during inflationary periods. I cannot stress that enough, because there are stocks that benefit from rising prices. And over time, if you continue to invest, you will get dividends on your stocks, you will get dividends on your bonds, and you can reinvest those and continue to grow your wealth. And typically, your stock bond portfolio will surpass the rising inflation rates. So you are actually building wealth during inflationary periods. Consider commodities, real estate investment trusts, materials companies, and industrial and transportation companies. These type of firms do well during inflationary periods, although my preference is just buy an index like the S&P 500 or total stock market index, and you'll cover all these asset classes. Although if you want to get into the niches a little, small caps, as you've noticed during the past year, as well as foreign companies, have done very well during this inflationary period. So keep investing, invest in your 401k, invest in an IRA, invest in an investment account. And with the money you save from using our strategies to beat inflation, funnel as much of that money as you can into the financial markets to grow your wealth over long term. We've also partnered with Groundfloor, which is another company that gives you the opportunity to be the bank. And so this company lends money to small real estate investors in short-term loans, and then the interest payments that they receive on those loans get funneled back to you. And you can get higher than market interest rates on higher than some bonds by investing in Groundfloor. And again, because we have a partnership, if you do invest through one of our links, either in the article or in the description below, our company will get a small affiliate condition. Keep investing in the stock market through ups and downs. I am proof over investing for many, many, many decades that your money will grow and compound beyond what you can imagine. Real estate, although when interest rates are high, can be kind of a tough asset, but it does appreciate. You do get cash flow, and you can look at some of the real estate crowdfunding apps, buying REITs, and with inflation, real estate prices usually rise as well. So by investing in some sort of real estate, if you're a large or small investor, you get a benefit of rising values of real estate, which will increase the value of your real estate holding during inflationary periods. And for our final bonus is, if you are a retiree or facing retirement, please do your best to wait till age 70 if you possibly can. Work part-time, take some money out of your portfolio if you can, because by waiting till you are age 70 to claim your Social Security benefit, your check will be 24% larger than if you had begun taking payments at age 67. And your Social Security benefit also rises with inflation. Thank you so much for showing up. And please read the full article because there are more tips in that article. And if you like this video, you want me to do more, give me a thumbs up, leave a comment, subscribe, and I will see you next time.